Good morning, everybody. Uh, last week, I started exactly from here to talk about the corrective wave ABC. I went to zigzag and all of that. But before I touched on this week and what we had seen so far from the market, the fact that you've not have many opportunity, you've not had many opportunity to trade lately, it's a good sign. Don't be itchy to trade. Don't feel discouraged that, okay, it's like you're not doing anything and you're not trading, that you're supposed to go to the market, get something out and all of that. It does not work like that. You have to understand how this market is. You don't jump in the middle of nowhere trying to dig and get something from the market. You're going to burn your finger. You must be sure that you are in a familiar terrain. You know what the structure is. You know what exactly is happening before you dive or you let down your net to catch fishes. It's very important that we know this, that you don't have trades for a week or two. It's normal when you know what you are doing because you don't want to get your fingers burnt. Um, the USD pairs, like I said in my audio notes, likewise the yen pairs, they are at a critical level that we expect a turnaround. And they are the levels that you have to be very careful to trade. For now, you can see the trend that probably against yen, they are buying, and against all other major pairs, USD is selling. Now, that is what you have noticed. But the trend is at a level or almost at the level of reversal. And we have to now wait and watch for signs. And when we see signs, then we know that yes, this thing is confirmed. Then from there, you can now begin to dig once reversal is confirmed. That reversal is going to happen anytime soon. Are we in the early days of reversal? We are going to look at that. Or are we going to see that reversal confirmed in about a week or two? We will see it together. And we are going to also dig down into how to pick the reversals on time and trade the early or the first wave of it. And, I'm going to teach on that. So I want you to be interested. I want you to pay attention to what I want to do now this morning. Yes, corrective wave pattern, we talked about zigzag, we talked about flat, being regular or expanded or running flat, and you can refer to the last video and watch again, and the expanded flat and all of that, which we did, the running flat and all of that, which we did, and the Elliott, which is the with three Elliots I told you can be 161.8, 200, 261, and 323, and the extension of with 5, being equal to 1 with 1 or 125 or 161, but not greater than 161 before you know it's okay. With 5, Now, I want to show us what to expect at reversal. Number one, we are going to be looking at the monthly time frame. These are the monthly time frame. Let me do something for us on the monthly time frame. How do we see reversal? First and foremost, what you must know at these levels of reversal is that they're not just any level. There are levels, or there are levels, or the mathematical level that you must know. They are mathematical level, which we call probably a fib extension or fib retracement levels. that agrees with Fibonacci. So they are not just any points, but again, you must know at these levels on the higher time frame, they might have like a little breach, on the higher time frame, but then it might also fall exactly at that level. There must be a little piercing on the back, but you must fall out because of the waves. Now, this is one reversal level. You can see a reversal to the upside. This is another point. This is another point. Though this looks like a wave 2 for this one, but this is another point. You may want to look at this, but this is another point. This is another point. This is another point. I will take this as another point, or this. And are we going to have another point? Now, I want you to pay attention to these points. I selected a few. This is CAD JPY on the monthly. I selected a few to see the kind of candle pattern. Number one, the most important is that number one, the fib level of this point and the kind of correction that we are seeing. So this is one here, and this is number 2, 3, a fourth, and the fifth level here. So these are the points. Now, are we going to see a 7 here? It's very important to pay attention here. Now, let me try and enlarge this. I will just be picking few levels for you to see. Now, when you see the candle pattern, let's start from the first one that I saw on CAD JPY. Now, at this level, you will notice that it is the price has been selling, and immediately at that important fib level, you can see the candle. Let me show you the candle here. So you can see the candle here. It has been probably selling, and the candle, it's like this. If you see it as a hammer that the price is going to go down, it doesn't work like that at those important fib level. No matter what the direction they are giving you, it might just be that they want to change direction. So what you can see that price had been like this, but immediately the first bullish candle appears, which is a doji. That might be the first indication that they're going to reverse at that level. So you must know that when you are at the important level of reversal, and before you can say you confirm, you are going to see it first on the weekly time frame or on the monthly time frame, and then all this again, they might want to come back to it and all of that. So that is what you will see. So if you look at this level also, this is another important level. Price had been bullish, and when you see this, it's a full body candle. You'll think, oh, maybe they're going to. It doesn't really work like that at the reversal point level. But again, you are also watching for the first candle against it, and this is the first candle that appeared against it. And this may have just gone for a month, and before they did a retracement here. So we're going to be looking at these levels. That's number 2. Not until you see a major candle close against it, the candle that has been probably bullish or bearish, as the case may be, at those important fib level, it won't confirm a reversal. Okay, so let's look at the third one. And this is the third level also. So you can see at this level also, it was, this one is a clear demonstration of a fifth wave. That is the way it's going to look on the higher time frame, which is the monthly time frame. It bonds closely out, and this was the last one. Immediately you saw this, then it's an indication that it's probably the one to reverse because it's an important level of reversal. Then let's look at the other one. These are things we will see also. Let's look at this. Let's look at this. It has been bullish. This one tells us probably it's going to go higher. They broke this level, and you think they'll continue to break higher grounds. And this happened. Look at the shape of this candle. This also wants to look like, okay, a doji on another time frame, and the price trusted down. So to see this engulfing candle and this is a good price action for a downside. And but this is a month and a month and a month, and before they did this, after they trust down, within the first 2 months, 2 months, they took another one, 1, 2, 3, 4, 5 months before they finished with 2. So you can see that it might be difficult for you to pick something in the middle. You can't, you won't even know when they will finish that with one. You know, if it's going to take like 2 or 3 months, it took 2 months to finish it, and 1, 2, 3, 4, 5 months to trust down again. 4 months in the middle before they begin to trust down again. So we are still going to look at the internal structure of those ones at the reversal point. That's the number. That's another one. Another one you will see. Let me see if you can see another one again. Another one you will see is this one, which is the last one here, which is the last one here. So you can see also here too that at the monthly, after this one happened, then the first candle, this is the first thing that tells you price is about reversing and they are going. So that is how to look at it. That's how to look at it. So now, again, look at this candle here. So what is going to happen? Are we going to have another candle burn off here? But again, when you see a bullish candle here, there are 2 things that you can read from here. Number one, that the sellers are trying to come into the market. The price actually got here, but within that month, and the sellers try to push and force the market down here. That's one thing you get here. So they are trying to force it down. Again, this candle may not go beyond this one. Another bullish candle may close next week or not, but we are going to be interested in seeing the first monthly bullish bearish candle before you say, okay, movement to the downside is confirmed, because this level is another level, important level of reversal. So it's another important level of reversal. Price may just, begin to go bearish, but we're going to see how to interpret. Now, let's also go back now to see the weekly structure of those levels, how those levels look on the weekly chart time frame. Let's be quick about it. There's a whole lot to do today. Now, the first level, the first point I'm going to look at on card, that's 020720. Let's look the 2nd of July 2002. So let's look at how it is. Now, this is it here. This is it here. You can see the way it is on the weekly. So this is what you first see. After this move, then this one appear at that level. So you can see that even this one is a month, 1, 2, 3, 4 months of that price action and all of that. So you can see that the first thing you will see at those important level that the bears took it down and they came in, and this one is kept forming, which is a correction before this one. So we're going to see internal structure of this one later. That's the first one that you'll see. And another one that you will see again, because you have to pay attention. You can't wait for a whole month candle to close. You're going to be losing a big peep in the middle. And that's why you must know how they form on every time frame. So let's look at the second one. Second one is 0110 2007. 0110 2007. So let's see what it gives us. So look at this one, what is giving us here. So immediately after this, then they threw the candle down. This looks like an inverted hammer. After this one, this kind of formation, with the tip bit down and all this, so you can see that this is an engulfing candle that tells you price is about falling, but you would have missed a whole lot even within this week. So we'll also break it down to the daily time frame to see how they look like, so that you catch all these moves very early. But you can see within this week is the first move. Then let's look at another one. Maybe the more recent one, which is 2020. The more recent one, which is 2020. 02. March 2020. So this is the more recent one. That's the weekly. So you can see the way it is also. You can see the way it is also on the, you can see the way it is. The price had been bearish. Then the first indication when you had this one is an indication that probably they want to throw it up. With lots of wick, below it, means that the bears will still try to close a bit down before they move eventually up. So you must also have at the back of your mind that price will not just close like a long week like this. They will try to still want to come down. But with this 1 week and the second week, they even came back down, voraciously, and this and this. So we're going to be seeing patterns here. Then the last one I want to look at here is the last, okay, I think that's the last one, 2020, okay? That's the last one. Now, let's look at how they look like, the daily time frame. Daily time frame, let's look at how they look like. That's the daily time frame now. So to see, now, it actually broke down. The seller came down with this, and immediately an engulfing candle formed. Then they took it down, another one went higher, and all these are corrections here. These are actually corrections. This is the first correction, which is A, B, and a C, and X again. And after this, they now moved up properly, which is like wave 1, wave 2, but they were still trying to correct with this. So this is a move. So with this move and with this move, it's like a confirmation that they're going to go further up. Let's look at another level to see how they appear on the daily. Let's look at 03, 11, 2003, 2014. Let's look at how it looks on the daily time frame. So here it is. That's another reversal point. So you can see that the price burned down, and so you can see what is, so immediately on the daily time frame, so the next day they took it's equally equal length candle, which is the bearish signal that they are going to move down. And they moved down within how many days? 1, 2, 3, 4, 5, 6, 7 days, which is a week. And the following week, they did what? They did correction to wave 2 before they begin to move down. So that is why even if you miss this wave, you must not miss the second wave. So it's also very important within the second week. So it's very important to know what it has given you. So if you still now shift to the weekly candle here for this particular reversal point, let's see. You saw the way it looked like. So let's shift to the weekly. So now see the way it looked on the weekly now. See the way it looked on the weekly. This is the first one. This is the first week, that went down, straight down, and this is the second week. So you can see the way it looked on the weekly, and then engulfing candle that broke 1, 2, 3, and this, the second week. And the second week, this is the entire second week here. This is the first week here, and the entire second week. That's how it looked like. So on a monthly time frame, if you want to see how it looked like, so you can see the way it now looked like on the monthly time frame. So you can see it that almost, those things are now, this is the way it appeared. So you begin to look at them on the 4-hour time frame, and you go to the week, the daily and the weekly, and you now confirm on the monthly. That is how to quickly spot those levels and begin to know where to trade. But again, the fib level, is very important. Let me quickly go to another one of the MPS. This is the pound yen. Pound yen. Now, this is the pound yen. The monthly time frame, pound yen. So we want to see those points of reversal that we had marked. I'd marked them already. I'd marked them already. So you can see them, those levels, the way they've been marked already on pound yen. So we have 1, 2, 3, 4, 5, 6, 7 here. About 7 points. I'll just be looking at one of these points. I'll be looking at one of them. And the point I'm going to look at is this one. I can't possibly go. You can do all of that yourself and go through all those points that you can see reversal and see the way those candles closes. I'll go to 2015, which is more recent. It is more recent, June 2015. So that is which one is that is more recent. So that's it there. This is it here. So I want you to take a look at this. So you can see the way it looks like here. That's a point. That's the price action here. With this and this formed, and immediately it took like 1, 2, and the third month for the bears to actually close a candle. So now let's look at that point on the weekly time frame. How it looked like on the weekly time frame. Now this is it on the weekly time frame. So look at it again here on the weekly time frame. So when it was confirmed, see the shape of this. The shape of this, it's very close to what I showed you before with this one down, and the sellers have been trying to come in. So the point of Fibonacci is also very important. You can see the head down, the body down, but the pressure came and the first doji during the week, and again they did this the following week. And this also looks more like what an evening start to send the price down, and the third week they went further down and to do with two corrections, and that with two corrections from here took another how many weeks? 1, 2, 3, 4, 5, 6, a month and a half week. And if you are selling from here and you did this and the price went against you, you say, okay, within the first 3 weeks, oh, price went down, and now for another a month and a half, you tell yourself, I think price is going to break above. So it's very important. You must know those psychological level or fib level to know maybe price will not do more than that. So eventually the price now trusted further down like a big wave here. So we're going to be seeing this. So let's look at it again on the daily and see the way it appears on the daily. On the daily. On the daily, so I actually wanted to pick 0106 2015. Sorry about that. 0106 2015, not 2014. There's a reason why I chose that. Let me go to monthly. There's a reason why I chose it. Okay. Okay. I think I showed you this. This is it here. Okay. Yeah, I showed you that. It didn't change in that place. Weekly. Okay, yeah, it's still the same thing. Now the daily. Okay, so this is the daily. This is the way it appeared on the daily. Now, if you don't know, you'll think, oh, it's a full body here. And with this one forming, maybe the price, is consolidating and they're going to break higher. So you can see eventually that they consolidated for 1, 2, 3, 4, 5, 5, 6, 7, a week. They consolidated for like a week before the price made it down to finish with 1. So we're still going to be looking at whatever happened here. These are corrections, 4-hour corrections here before price made it down. So this is wave 1 from here to here of internal structure of wave 1. Wave 1 ended down here. So this is like internal structure of wave 1 to this place, and wave 2 of 1. And here is 3 of 1 before we have 4 of 1. And we finish 5. No, sorry, with 3 of 1 finished here, and we now have 4 and 5, and with 2 now started to go up here. So that's with this is the daily candle formation, and with 2 ended here, and they trusted a bit up to fool you, and before we began to move the price down to wave 3 proper here. So I chose that for a reason. So let me see 4-hour time frame of it. So waiting for these two. Yes. So this is a 4-hour time frame of it. So you can see the way the price began to go up, and price this at this level, still came down, corrections and all of that, which might be difficult for anybody to pick, and until the price finished up here at this level. So, and you're now having a 4-hour correction. So you can see the 4-hour correction that I talked about that went on for like a week. And after this, like a week here, so this is the last one again that went up, almost kissing the top again. After this correction, price went up, kissing the top again, and this is wave 1 here, on the downside. Wave 1 to the downside, and wave 2 of 1 here. So wave 1 to the downside. So you can look at the international, the way this thing is looking like on the 4-hour time frame. This can do a move down and a correction here and here to give a wave 2 of 1 and a wave 3 of 1. So a wave 3 of 1, a wave 3 of 1, went down the 3 of 1 and a 4, a 4th, and let me try and so that you can see it. This is it here. A 1 of 1, 2 of 1. Now we now start 3. The 3 of 1 will be divided into 5 major waves, which is 1 and 2 and 3 and 4 of that 3, and the 5 of that 3. We now have like a 4 of that 3. So we now have like with 5 in between that, with 5 that now ended like this to finish with 5. So this is the entire wave 1 structure, and wave 2 here, wave 2 here, wave 2 here. So if you look at this, you expect that wave 2 should not, that is one thing they can do at times. This is actually wave 2. So that's wave 2. That's wave 2. We'll now see that this is wave 3 down here that is going wave 3. So after the reversal here, so wave 1, wave 2, and that's wave 3 coming down to the downside. Then after wave 3, we have the first wave of 3 here, which is the first wave of 3, then 2 of 3 here, and this is still part of 2 of 3. So you can see the way it went. After the 3 of 1 ended here, 1 of 3 ended here. So we now have A, B, and a C to end 2 of 3. We now have with 3 of 3. Starting from here, a 3 of 3 came down, and a 4 of 3, and a 5. And after a 5 of 3, so we now have another with 4 of the major here. So this is like a 4 of 3, a 5 of 3. So this ended with 3. Right from here, with 3 ended here, because you must know that wave 3 of 3 is the longest, and it's going to see you, count like 5 waves also, which ended here, and to now give back rise to a 4 in the major degree. And with that 4, we did this 4 is like A, sorry, like this, like A, A, a B, a C, then other corrections in the middle before you now have this. Okay, let's see. 1, A, B, C, X, and A, B, C. Then it just set down. So this is with 5, and with 5, in between here also we'll see 1 and 2 of 5, and the longest of 5 is this one, which is the third of 5, and the fourth of 5, and the fifth of 5, and that ended, and another correction, around here to end the entire wave. Okay, yeah, this is 3 of 5, and the 4 of 5 here, and the end of 4 of 5, and another change in trend here. So that is what we can see. So back to the present on this particular pound yen. This is the present thing here now. This is what we are seeing now here on pound yen. Now the first thing we have told ourselves, let me go to the monthly chart on this. Now, is it time for all yen pairs to now begin to fall? Of course, you don't expect them to do that. They are going to be having different structure at different levels, but you might begin to see formation of wave 1 here on the pound yen. And from what I told you, the analysis I did, I said this is what this level is, a 61.8 fib that I gave you. If you watch last week's video, price didn't go beyond that 61.8. Price came right back there and right to visit the place. And this is 76, this is 85, and this is 90 of this entire run here. So then I told us that this entire run here is still part of wave B that went up a corrections and to do a double bottom to give this wave. So I still see this is wave A, and this is all this in the middle is part of wave B. And we said that, okay, this now looks like the final leg of 5 of that wave on the monthly time frame. And so if price should close above this level, then you should forget that it's the end, but probably they're still going to go up to touch this level. But for now, it's looking like as if price is going to return from here. So we're going to be interested in seeing the next candle that is going to form here. So looking at this here, so are we seeing the end here? And because this is an important level of fib retracement, are we seeing the end? So any other place I won't consider it. So you can see the way that level is, and after this candle, and this is the formation that we have, and at the tip there is a 61.8. Now let's look at it, what is looking like on the weekly time frame. So on the weekly time frame, this is what we have. So we can now begin. So this is the weekly time frame. So you can see now the price action here. 1 week, we are seeing what this thing had given us. Now let's now look at it on the daily. Now look at this on the daily. Now this is a good price action to tell us that early something wants to happen, because this is at the level that the price had fallen. So it's like something wants to happen. This is a correction here in the middle here. So price went up and this came down. Is this a 5 or a correction? If this is a correction, because you expect ABC correction, this one came down and this one went up. If the movement from here to this point is more than 123, then I won't say this is a correction. This might be a fifth wave. So we might be seeing the early part or the early thrust down to change this trend. So if I pick my feed retracement tools and I put it right where you have this green to this where you have red here, and I pull it down to this level, this is exactly 161.8, 1.618. So which looks to me like a wave 5. You can see a wave 5 here. So we are going to be now looking, we are going to be interested in seeing the internal. So I sold exactly from this because I put my trade at exactly 168.084. That's where I put it. It was this one that broke it and picked me in, and I exited from here. Now, let's look at the 4-hour time frame of what we are seeing here. Now, looking at the 4-hour time frame, the price action here is such that this is why we say that it might not be entirely right on the dot of it. It appears it on the 4-hour action because it walked across it, tells me that this is a price action for downside on the 4-hour time frame. So we have to look at everything, all the higher time frame, and we are confirming the position of things. Now, if we now look at this now, see what we are seeing. This is the first price action for the downside, which I saw early in the week, but you know, they can be funny. But eventually, these had formed like a wave. Which kind of wave is this? We're going to look at it now. We're going to look at this kind of a wave. Let's now switch to 1-hour time frame. This is where we need to see what exactly is happening on the 1-hour time frame. This is where we have. I exited exactly here. Now with this, it's looking so much to me as if the price is breaking down. We might be seeing the first yen move, but this is still part of wave 1. This is still part of wave 1. So we have not done wave 2 at all. So we might see wave 2 going up. It might not get to this point anymore, but we'll still try and see what's going to happen. So we are seeing wave 1 in the making. As far as I'm concerned, wave 1 in the making on pound yen. That has given us wave 1. Now, this move down here has completed the 5 of 1, because 1 itself will have 5 wave structure. It has completed the 5 of 1 here. Before you now have the 2 of 1, and you now probably we are seeing wave 3 of that one until we now see the end of it. Now, let's say something. If I say that my 1 of 1 of 5 waves ended here, and I say that for the 2 of it started here, 2 of 1 started in that place. You must understand these corrections, and we are telling ourselves that, okay, maybe we are in the 3 of 1. At what level of 3 of 1 are we? Is it exactly 3 of 1 here, ending here, and we are doing the 4th of 1? We might be doing the 4th of 1. So let me use black. I want you to see what I'm looking at. For me, I think this way will still end, and we will now rally up properly to begin with 2 of the higher degree, but this is still wave 1, and wave 2 of the higher degree is going to take more time. So now, let's switch to the 30 minutes time frame. So look at the internal structure of this wave. Now, looking at the internal structure of this wave, let me just take this a bit above. So we are seeing that the price action took the price down within that frame. So how many pips? That's about 33 pips or thereabout. Now, so if this is entered with, you divide with 1 into 5. So that's what I'm saying now. You divide also with 1 into 5. When you are looking at the internet, if you don't know how to count this thing, it's going to be messy and you won't understand it. So it's looking like that to me, what is given me. So we divide with 1 into 5 structure and the 2 of 1 also into ABC. And this is the 3 of 1, which is going to be 5 wave. And before we now do a 4 and a 5. Now looking at this, from here to here is a 1, a 2 of it, a 3, a 4, a 5. So it has ended with 1 of 1 and 2 of 1, which is A and a B and a C. Okay, the a B, and a C. Then after a C, we've actually 3 of 1 started from here, which is 1 and 2 of that 3. So we are in the middle, which is the longest of the 3 of 1, which is the 3 of 1 is going to be like 5-wave structure before we end that. So as far as I'm concerned now, so if we're going to see, look at here to here, is it like wave 2 really? From this level to this level, that is like wave 2, because this is almost like, nothing is perfect. This is almost like 76.4. That is like wave 2 to me. That's like wave 2. And if that is wave 2, what qualifies this one as wave 3 is that it must, that means 3 of 1, it must be longer than 161. So if we look at it from 1 to this, the end of 1 to 2. So this is almost at 161. So the 161 now is at this level. It's at that level. So if that works out, that might just be with 3 of 1 that is finishing, almost finishing here. So we can see the internal correction already with this move here. This might just be A and a B and a B, a B, and this might just be a C. And we're going to see what is going to happen here to finish this leg. And if they finish this leg, and that will be like trying to finish 4 of the 3 of 1, and I don't believe that we have finished the 5th wave of it. So we might still be going a bit down, and I don't want to join this. I want to wait for price action to go up, because I know price will still go up. And by the time price is now going up, I'm going to wait and continue to count the entire structure since I got off this trade at this level. I think it was at this level that I got off this trade, thinking that it was correcting. But now it's giving me the formation of this is like a wave 1 that is on. And if that is the case, I would not expect that, after completion of correction, wave will come to this point again. Maybe very close to it, but we'll see. If this one forms 1, then we're not going to look at 2, that it shouldn't run beyond 85 or 90. I will want to put my stop loss if I'm going to sell again, a bit above here. We're going to be looking at these structures, but that's the way it's looking at the moment. And again, to look at this on the higher time frame, the structure that we've broken at the end of the day that will confirm that yes, the movement indeed has changed. The first place that must be broken is this level. Once you break this structure, which is the resistance support here and resistance here, and we break it down, definitely we expect it to complete with 5 of 1 slightly below this level, because this is 3 now of 1. This is looking like, okay, 4 of 1 in the middle. This might be going to break this level to finish 5 of 1, because this is 161.8. And we say that it has to at least get to this point to finish with 3. So if with 3 of 1 will finish here, I still expect that with 5 we pierce this level, and very soon we'll be seeing a movement to the upside. And from that change of structure or change a price action to the upside here, then we'll be looking at probably buying it to the level of 61.8 and see what will now hold after 61.8. So for me, it's looking like an early day of, we are trying to change trend, an early day. But by the time we do that, we might see a price action that takes or that wants to close look at the daily time frame. So this is the day time frame. If you look at the weekly time frame, so you can see that proper body candle had formed on the weekly time frame, and this is what we are seeing like a week on the weekly time frame. On the day time frame, we have proper body formation, and on the weekly time frame, you can see the kind of price action that we are seeing here, and is at an important level. So you can see at those important levels. So at the end of the day, we might see, by the time we are now pushing up from this level up, we might see a body fully formed here, which will be good, and a price action that will now push the price from wave 2 down, we're going to wave 3. And that might take another 2 weeks or about 2 weeks or 3 weeks to do this. So all of them will be at different levels. That is what I can see on pound yen. That is what I can see on pound yen. If you look at CAD JPY, the CAD JPY, so on the monthly time frame, you won't see anything yet, but these are early days. See, the same thing on the pound, you can see after this move for almost 1, 2, 3 weeks. So the price has been going sideways. So this is an ending diagonal on the weekly time frame that is already, and the price also is at a very important fib level. If I switch to the monthly on the CAD JPY, we might not be seeing more movement again. But again, we are at critical level that we have to be watching price and henceforth. This is at 90 of the retracement here of this, the whole movement down here. So which is, if this one is B wave. No, sorry, this one is not B wave. Okay, this is A wave. This is A wave. The entire structure here is A wave. After this big move, these are A wave. This is a B wave. So this is a B wave. So now we are looking at this C wave in line in terms of this A wave of the B wave. This is entire A and this is B. So we are looking at this. The fib retracement of the B wave to A it's about 85. It's about 85. So we don't know what is going to happen here. It will be interesting to see. That's why, YMPR is a bit difficult to, but in terms of this wave, this is like 90. So is it going to pierce this 90? If it should pierce this 90, then price may still soar up a bit break the top, and if that happens, probably around here. But we are here to see that. We're here to see that. This is on the monthly time frame on Cardian. We're here to see that. Are we getting to the end of it on Cardian? So we are still at this level to break the 90. We're at that level to break the 90. So see this also price action. So if you go to the weekly like I showed you, it's looking like an ending diagonal. So if you go to the daily, what do we have? So you can see that the price action is also now, pound JPY has led, and these ones are just coming down. These ones are just coming down. They still have more to do. So at different levels, and let's see. This will be the level to break on the daily, and once you break this level on the daily time frame, this level on the time frame now confirms that the trend has changed. Once this level will break, I will expect this wave to complete itself. Wave 1 should be completed around this area for wave 2 to begin on Cardian. So we are paying close attention to this and looking at the internal structure of this on the 1 hour time frame. That's Cardian. After this move to this level, so do we have wave 1 of 1 completing here, and this is 2 of 1, and this is 3 of 1. Are we seeing that yet? We are going to be paying attention later to what is happening or transpiring in that area. Now let's look at another one. I'm trying to be as fast as possible. Let's look at NZD-JPY. NZD-JPY seems to have dipped more than other ones. Seems to have dropped more than other ones. NZD-JPY. So you see that one. It has not even gone past here. And okay, so the way this one is really funny. You can see lots of these. It looks like, okay, are we still correcting? That's the way. There's a whole lot of pressure here, and the price may be ending in, maybe ending in weeks before they probably push a body forward, upward. Let's see. It's already showing that the sellers are coming in here. So let's look at the daily. So you can see after this correction. So this one is a proper, body that had formed. So the price is crossing. So it's also going down. It's also going down. So it's going to complete with 1 and come up again. So the price may not break higher than here when the price wants to do it 2. So we are going to pay attention. So the internal structure of this wave is very important to us now to count all their internal structure to see what they're going to give us. It's very, very important. Can you see the way it's falling? It's falling, and this tells me it might fall close below here. When they finish with 1, we'll see that they are finished with 1. On the 1 hour time frame. So these might look like some corrections, and with 1 and all of that, and see. We're going to see what is happening here very soon. Early days, CHF is the same. CHF JPY is the same. CHF JPY is the same. Is the same. All of them, they are doing similar things. This is at 90, and just breached 90. I don't expect it to close above here. This is where I have my 5.5. So is it what we are seeing at the moment? Sorry. The weekly, almost the same. The daily, you can see it's been trying to push down. If it's going to be like that, then we might expect a 3, the third leg of wave 1 here. So this has not shown me that we are seeing third leg of wave 1. So it's going to be an engulfing candle to confirm that the third leg of wave 1. Okay, let's see 4-hour candle, anything like that. No, this entire one still looks like wave 1. Wave 1. So it has not actually finished, and we'll see. Let's see. This one is a bit. It's a bit. It's a bit difficult. It's a bit difficult. This might look like the whole of 1 and 2. Maybe we are on 3 of 1 and 2. So we'll see. Let's see more structure here. Let's see more structure here. But all these yen pairs are, doing as if they are on their way 1. That is what I can see. That's what I can see. So let's look at the last one. Here's the JPY. That one is entirely different from others. USD JPY. So if you look at USD JPY, the way it is, it's a bullish move, and it's completely different from others. So we might see this one going a bit above. So this is at 129,200. So it's possible we might see it get to around 130. 130 is around this area. It's around this area. So it's around this area. 130, between 132, 135 is around this area. I have my hand. It's this area. So it's just like a few more pips. We should be expecting price action anytime soon on this one. At the moment, this is the weekly candle. At the moment, I'm not seeing that. The daily candle, at the moment, I'm not seeing that. Well, this is the first reaction at this level. I think we are going to break above to this area, around this area. So any price action now, we should be looking for sell around this area. So like anything within another 80 to 120 pips above the recent top, we should be seeing price action. Yeah, from here to that, we should be seeing this week, we should be seeing price action. So, but again, there's nothing telling us that it cannot even break down from here. So we need to continue to check every 4-hour candle here now to be able to now catch this one, because some of them we are already deep in wave 1. So this might start is wave 1, 2. So soon, let's see what we are seeing here. This is the first price action. It's tricky. You can see this price action has shown us that it wants to trust the price, the thing down. So we should think that price may break above or not, even from here self. So we are thinking that it's going to get to 130. It has gone beyond 129. It's 129, 300, 129. Yeah, about 129, 400 now. So 129, 400, and we are expecting 130, which is like 60 pips, or 130, 200, which is like 80 pips from here. Or price action any moment from now, we should just enter this one. In terms of correction, is it wave 2 material of wave 1? In terms of correction, yeah, it is at the moment. It is at the moment, because this is like exactly at 85.4. So we are going to pay attention to this one and see if price is going to break down from here or not. If you get a setup a sell setup here with my pick and just hold for a few pips above this level. Let me look at 1 hour time frame here. The 1 hour time frame I'm seeing here also is telling me that price may be falling from here. Price may be falling from here. This is looking like recipe for with 2 of 1. If this one is with 1 of 1 and has ended as 5 of 1, so I will say 2. This is A, B, C, X, A, B, C. A, B, C. Looking at this, it might be the beginning of wave 3. So if I were you, if I want to trade this, I want to see this as wave 2 and just put my stop loss somewhere above here. If it touches me, I won't be losing big, but I'm seeing this as a wave 2. Wave 3 wants to start already. This is wave 1. This is A, B, and a C, and X. A, B, and a C, which has completed this for me. It has completed wave 2 for me here of 1. So this is the early part of wave 1. That's the way it looks like now. Early part of wave 3 of 1, 3 of 1. So this is looking like the price action is such that they want to throw the price down. And if I want to look for, and these are things that we do. These are things that we do. The 30 minutes time frame. Let's see, 30 minutes time frame or 15 minutes time frame now. Let me go to 15 minutes time frame. Looking at 15 minutes time frame. Exactly. Let's see. If it is with 3 in the making, with 3 of 1, 3, 1, 3, 3, 1, yeah. The first wave, 3, 1. And this is 61 point exactly. This one is in keeping with 3. It's keeping with 3. So and this is 15 minutes time correction. It's 15 minutes here. So this going down is going down is significant. Very, very significant. On 30 minutes time frame. Yeah. Very significant. So from here, with 1, so what I would think is that if this one is on the 30 minutes time frame, if I pick this one as with 1, I'll be looking at least this level to this level for a correction up. But this might just be A. So I will still want to analyze this further and see where we can actually sell this. Where we can sell this one. In the 1 hour time frame, let me see. This is 1 hour time frame. This is an early part of it. It's an early part. I think it's so we can just see if we can. How many pips can we just try to? Maybe about 50 pips. So we'll see. I will come back to that later, and if we can do it, if you can trade it, I will let you know. So that is what is looking like to me. This is already 81. So I think price is going bearish from here. That's what I can see. Now, having said that, let's go to Euro USD. Euro USD. Nothing has changed in that place. Nothing has changed much on Euro USD. So on Euro USD, nothing has changed much rather, on Euro USD. So if you look at Euro USD, let's start with the monthly time frame. And these are, I actually did tell us about this the last time, that we are with 3 and we're about finishing here. And we said, are we going to see a pullback of 4 here before we finish with 5 here? And with 5, if you can finish here, which is 100 retracement. This is 61.8, and this is like 100 here, which is around 104. Now going again into the monthly, into the weekly. So this is a correction that we are seeing. Like I told us, I discussed this with us. As far as I'm concerned, this is A. From here to here is A, and this is B. And we said that a B should fall around 1.07154. Anything more than that, we want to get out. So that is, we are probably looking at this level where the price is going to come to, and we might have a C leg up, and after this C leg, then we'll start with 5 proper to finish and to get to C. I'm still biased, but if price wants to be pushing down from here, we're going to close once if we are going to be looking at the price action on the daily and the weekly, and so on the 4-hourly to know if we're going to exit to buy, because the pressure might just take the price down. If they have finished their correction here, this might be going down. We need to see that. We need to see that. On the daily, now this is what I've seen. And I said, I tried to look at the correction here. If this one is A, and this one is B, and this one is C, what do you call this one? It's not completed. You can't say it's X and this one goes up like this. A C should finish here and this one should come down, as a correction. So the fib analysis or retracement here does not actually tells me that this is A and here is B. It does not work with it, like I told us on the daily. So if I come from here and I take this one to this level here, this level here is like more than 61.8 and it's not up to. So I wouldn't have called it a zigzag. I wouldn't have called it a zigzag, because it does not really agree with it. So if it's going to be a zigzag, then this should have gone up to like 100 here, which is not up to 100, and this one. So I think it's still part of the correction. So because it doesn't appeal to my own logic of correction, so I will take the entire move as A, and what is coming, I will take it as a B. So, and if it's a B from here, like I told us, I'm going to do this to expect where it has gone past 61, and this is 100, that's gone past 100. So we are almost approaching 123, which is here. So I'm expecting reaction here. And if it goes beyond it and there's no price action, we'll just lose a few pips. Nothing spoiled. Nothing spoiled. That's how to trade really. You might be seeing this also as a correction of 5 to end here. So that's how to actually approach this one. So on the 4-hour time frame, then you'll be seeing big candles that will be confusing. So now on the 4-hour time frame, like I said, the whole of this is what with A, and I see the whole of this as with B that has not ended. I see it as with B that has not ended at the moment, and it's still a bit going down, and if I see this as correction, and this might be giving me a fifth of this entire wave, most likely a fifth of this entire wave, but that's how to trade this one. Where is it again? So the price is almost here, which is at this level of 107,179. If it gets to this point, just a few pips below it, then we are good. And if it goes up to give us C, good for us, it might just give us C, and C might go up as an impulse. It doesn't mean that it's going to break up. It won't go beyond this level or this level, and it should come back to now start with 5 proper, and we end there. But I don't think it's going to go down to break more than 100 for now. This is 61, this is the green, and the other green penetrated gain is where the 100 is. So, for today, that will end the training. So this is where 100 is. This is where I think with 5 of that trade will terminate, which is around 106. Sorry, around 104. Yeah, 104. Around 104, 430 or thereabouts. So we should be looking for a bullish move anytime soon. So the price may still fall. If we have C from here, then it's going to fall below here by another, let's say another 300 pips or thereabouts, 350 pips or thereabouts. So they're almost ready to reverse. And if this one does not hold, of course, I told us that the next place that would hold is here, which is where you have this thick line. If this one does not hold, then this is the one that will hold and return price. Price will go. That will be 123 if it's going to do that. As a rule of what? Running flat. Running flat can be 61. 100 or 123, but most of the time it's 100. So if you have 123, we will know. So, see you during the week.